Hey, everybody, welcome to Commercial Construction Elevate the Industry podcast series hosted by yours truly, Dave Presida. This is for anyone from owner to intern to help you navigate commercial construction so you get where you want to go as quickly as possible. Today, I'm excited to have a guest, Sba Weissburg. He is all over about finance. He's the Chief Commercial Officer and co-founder of a company called Build. That's BILLD, as in if you just build an invoice. And we're really happy to have you here, Sba. Welcome to the podcast.
Yeah, thank you. Thank you for having me. Really appreciate it and look forward to diving into this with you.
Awesome. You know, I've been in commercial construction for over 40 years, and one of the things that permeates this business, and it's difficult, is how you cash flow the business. We know receivables can stretch out forever. You often have to put labor and material on the project, sometimes 90 to 120 days before you even get paid, less retainage. So we're always concerned about, A, when you start a business, how you're going to cash flow it. B, when you have a growing business, how are you going to keep funding it? So I know let's talk about a little bit about your history so our audience understands where you've come from and your perspective.
Yeah, I'd love to. So, I've really spent my whole career in finance and a number of verticals within finance. So out of college, I joined a low-income housing equity provider. So, in the commercial construction space, we were investing equity into large-scale, low-income projects. This was largely on the West Coast, so in California, in the kind of mid 2000s. And from there, I moved on to Bank of America, and this was in 2008. If you can recall, during the Great Recession, that was not the best time to jump into banking. But fortunately, I joined Bank of America right before that took place, and really started to understand what the difficulties were with the, in the specialty contractor space, just in terms of getting approved for credit with banks, because we didn't have a large appetite for it at the time. From there, moved on, and I was in residential solar, so helping homeowners purchase solar systems, and now here at Build. So I've been involved in a number of different areas within finance and construction, both on the residential and commercial side.
Well, that's awesome. You're talking about specialty contractors, and that is right up our alley. Let's talk about your history and what types of financing you've been involved with, you're intimate with, in terms of the contracting business. Obviously banking is one, but before we went on air, you mentioned a few others. Maybe you could dig into those.
Yeah, well, obviously the hot one right now is PPP, and that's probably more of a short-term option for a contractor. It's great because of the forgiveness aspect of it. Another is, this is still on the loan side, but you have your SBA loans, your small business association loans. You have your traditional financing options with like a Bank of America or a Wells Fargo, where you can get approved for a line of credit or a term loan. You have your equipment financing options out there. And then you have credit cards, you have factoring, you have merchant cash advance, and then you have material financing, which is, the space that we play in. And there really is, I would say, a solid use and place for each one of those, depending on where you are as a company, what are some of the challenges, and what are some of your goals that you're looking to tackle, and what are the uses, right? So if you're looking at more of a short-term need, you shouldn't take out a 1, 2, 3-year loan with a bank if you truly have a 30, 60, 90-day cash flow challenge. So, one of the things that we really try to emphasize and understand with our customer base is, well, what is the true need here? And then dive into that. And I think what's difficult in the specialty contractor space is, most financial lenders out there aren't necessarily looking to work with contractors because of the issues with cash flow, with payments jumping out past 90 days and discounting those. So generally, contractors have a little bit of a bad taste in their mouth as it relates to financing. But there are some great options out there, and it's just a matter of understanding what is the best option for my business based on what my needs are today.
You mentioned something earlier that stuck with me. You said one of the things that you've been able to do over the years is help contractors responsibly grow their business. And you just mentioned it. What facilities do you use and when you use it? I remember when I started my business, well, I actually had a backer, but I bought them out of an LBO back in the day with NatWest Bank. And NatWest Bank funded me some money for the down payment. But then I was basically factored by NatWest because I was able to borrow. My line went up and down with my receivables, eligible receivables, 75% of eligible receivables, less retainage, and anything over 90 days. That was an eligible receivable. So if you were, and we're going to take a couple of examples. For example, a startup business in commercial construction. Let's say that their goal is to do $2 million a year. So they might have receivables of $300,000. How would you suggest or recommend somebody get started if they have the wherewithal to get the credit?
Yeah, I mean, obviously you're going to need a pool of cash, your own cash or likely an investor to, as that initial injection of cash into the business. So that I think that's first and foremost, because you're not going to be able to get approved for credit with a bank. Getting approved with a supplier for terms for your materials is probably difficult. And then you have to float the labor. So having, 3 months of expenses on hand and cash in the business, I think is first and foremost a nice target for someone to have in the back of their mind. Now, the lower hanging fruit out there for a contractor to finance their business, obviously you have a credit card and you can sign a personal guarantee and maybe get approved for, anywhere from $20,000 to $50,000, depending on your personal credit. But generally, you want to use a credit card to fund your everyday business expenses, not related necessarily to a specific project. So, you might need to use that in the beginning to fund some of your materials and for the first few months, but you don't want that to be kind of your long-term sustainable approach there. The two other options.
Unless you want the points. Just kidding.
Unless you want the points, but then we're talking about, hey, can you go negotiate a cash discount with your supplier because they're incurring a credit card fee? And that's something maybe we can talk about later on the show here. But the two other options are three other options. One is an Sba loan, and you generally do need to show, you'll need to have a business plan. They probably want to see some projections, maybe even some actual numbers there. So that is one option. But the other two are the merchant cash advance and factoring. I wholeheartedly would say do avoid the merchant cash advance. The rates are going to be to a point where it's going to be difficult to turn a profit. And it's something that once you get on a merchant cash advance, it's very difficult to get off just because the rates are so high.
Before you get to the next one, describe what a merchant cash advance is.
A merchant cash advance is essentially a loan for, call it 6 months to a year, where the lender will take out a certain percentage from your deposits on a daily basis. And when you look at it, it might not look like the rates are all that high, but over the course of that 6 months to a year, the rates are actually in excess of 50%. So they're going to entirely eat up your profit margin. So they might look attractive, through a short-sighted lens, but as soon as you expand it out, it's very difficult to get off of it because it's eating almost entirely into your profits.
That's a tough one. So
yeah. So I would avoid that. The second is factoring, and factoring generally, it does get a bad rap, generally across the industry, and that's because the factor. So if you want to factor a receivable, your receivable. So let's say I have $100,000 contract with a general contractor, and I'm an electrician. that factoring company will advance anywhere from about 70 to 80% of the invoice. So they might upfront fund you, $70,000, and there'll be a fee associated with that. But the bad rap that factoring receives in the market is the fact that now the factoring company is going to be responsible for going to your GC and making sure that they receive payment from your GC. So you're flagging to your GC that you potentially have a cash flow issue, you're smaller, and it doesn't put you in the most favorable light going forward as you're bidding on future projects with that general contractor.
Well, that's a good point.
So what's important?
Yeah.
Sorry, go on.
I was just saying, we talk about branding all the time, and what you just said will kill your brand, right? And I mean, unless you absolutely have to, there's probably better ways to do it, but please continue.
What's important? I mean, listen, there are probably about a dozen different factors out there who focus on construction. So it's not a massive industry in the construction space. But if you want to go this route, do your homework, go on, look at their reviews, see what kind of comments, how they interact with GCs before you jump into bed. And I would say that across the board, anyone who you're going to work with, really in any capacity, there's so much information online these days. You can go on and look at some reviews and get a general understanding of how you expect the partnership to work. But early on, factoring can be a great way to kind of get your business off the ground.
So, I talk to people all the time and say, well, I got a guy that'll lend me money. Okay, good. What else is he going to do for you? If all he does is lend money, then he wants a pretty big return on that investment. When we talk about starting in business in particular, if you need money, which you do, and you even said it, you want like 90 days of expenses available at all times. You can get that several ways. But if you go to a person who just wants to lend you money, you got to know what it's going to cost you. And don't let them be a partner, because then it's going to cost you a fortune, right? But if you want to bring on a strategic person who has money, maybe they do what you don't. And I think that's the best of both worlds, because now you got a partner that adds value to your business. 1 + 1 is 3, and you have the money. But like you said, a business plan is critical. If I'm an investor, I'm looking at your business plan because I want to know how you think. I want to know how you see the industry. I want to understand or believe and have confidence that you've thought this out and you know what you're doing. So that's huge.
Hi, I'm Patrick Ripple, founding partner of ISA Architectural. I've known that chap right there for well over 20 years.
And what a 20 years it's been. I'm Larry Windsor, partner, vice president of construction services. Our third partner, Mike Morehouse, can't be with us today.
We are the Mid-Atlantic's premier sales force for architectural building products and engineered architectural solutions. For over 15 years, we have been providing comprehensive design solutions to architects and designers all across this region, and high-quality economic product solutions to contractors and subcontractors too.
We bring products and people together. We specialize in the building envelope, everything from the weather barrier all the way out to different types of cladding. We fully understand the rain screen principle, and we have an interior portfolio specializing in wood and metal walls and ceilings.
If you're a developer, part of a design team, architect, or interiors, or if you're a contractor, let us help you.
Visit www.isaarchitectural.com and see how we can bring value to your project.
Let's move from getting started to a business that's already funded, has been in business for 5 years, wants to grow, and growth, right? As you said, if you're just in labor, 10 guys a day, it could be 90 days before you get paid. Just do the math. It's a lot of money. What would you recommend to a company that has an opportunity to do a big job, but they're already up to their eyeballs, on their line?
And so there are a few options there. You have a line of credit with a bank, you have terms with your supplier, but obviously terms with your supplier isn't going to help you on the labor side.
No.
And the more that you grow, the larger projects, the more projects you're looking to take on, the bigger the problem becomes. And it's a good problem to have, but it can be something that can take a business down if the contractor doesn't have the right resources in place to grow, I'll use the word responsibly again. So, one is a line of credit with a bank. If you have 5 years of history, you might be able to get approved with a bank, but that bank might not be willing to provide you a line of credit because the way a bank is going to underwrite and look at the contractor, they're going to look historically. What has this contractor done from a cash flow perspective? What was their revenue the past few years? They're not looking off into the future and looking at what this contractor has in store from a project perspective. So they discount what the contractor has moving forward, and they're really looking at the historical numbers. And the historical numbers might be half of what the contractor expects from a revenue perspective for the following year. So that's where it's a little bit difficult to work with, a traditional bank. But if you can get approved for traditional bank financing, a line of credit will be the cheapest source of capital as it relates to, cash flowing your business. And then, supplier terms, contractors are tapping out their supplier terms. And guess what? They go down the road to the next supplier, they take out a line, then they go to the next supplier. And before they know it, they have, they've maxed out their credit with 3 or 4 different suppliers. And that becomes very difficult for a contractor to manage. How do you manage your cash? So you have cash coming in from one project. Which supplier am I paying off? I'm likely prioritizing based on how long the funds have been outstanding. And now I have this large project that I need to buy materials for. So that becomes very difficult to manage. So, something like, and obviously I don't want to dive too much into build here, but if you can find financing that really lines up the type of financing with the project, that's where, and you can incorporate the cost of that financing into your bid. Now, all of a sudden you can really align, one-to-one, apples to apples, however you want to describe it. And you can kind of grow in that methodical way, and you can align your financing expenses to that specific project. I think that's the way the industry is moving, and it's easier for contractors to manage, rather than this holistic approach across their entire business.
Well, I can tell you that, many, many years ago, I was highly leveraged, and the bank came in and said, "Hey, we're not going to renew your line," which is a nice way of saying we're cutting you off. And it created all kinds of issues for me, but I did learn a lot from it. Number one is you better be billing properly, right? You better be invoicing for every single thing you can get. So your schedule of values is critical. Collecting your money is critical. As you said, on bigger jobs, in the contracts, they can direct you to do additional work, and it could be months before they recognize whether that's even a change. So you're fronting all of that money. At any rate, now, you've given a pretty good, you've encapsulated it well as far as general financing. I will say one more thing. I did bring on a supplier and got 120-day terms when I needed it because it created cash, but that's not the long-term fix. So now, here you are, you co-founded Build. Tell us about the company and how it got started.
Yeah, so as I alluded to in my opening, I was previously with a residential solar finance company, and we were funding solar contractors really on behalf of the homeowner to mobilize the project. And what we quickly noticed was these contractors, they had terms with their suppliers, but they really didn't have any other financing options available. And I knew this from my days back at Bank of America, but it became very obvious that there was a broader opportunity within the commercial construction space to provide specialty contractors some cash flow help. So it was back in towards the end of 2018. Chris and I left our last startup and started Build. And we spent the majority of 2019 really kind of building out product market fit and processes and getting our funding in place and all the laying the foundation for the business, and really spent 2020 starting to scale up, which, as you know, COVID hit over that time. So that was an interesting time to be growing a business while, the economy is kind of pumping the brakes a bit. But what we quickly found is that really exacerbated the issue for contractors, right? I mean, banks are tightening up their terms, and here we are. And we wanted to have a little bit of a wait and see approach to make sure that the economy wasn't going to take a nosedive. But what we quickly found is it stabilized, and it was taking contractors a little bit longer to build the project. But there was a great opportunity for us to step in and really help the contractors who were continuing to work. And from there, we've really been growing ever since.
So you do short-term loans for specialty contractors, and I'm going to say this right now, and I said it before. When I talked about in a recent podcast about leveraging your suppliers, well, they might pay a point, 2 or 3 more. If you can't afford that, you shouldn't be in the specialty contracting business, right? Specialty contractors should make more than, obviously, a general contractor makes very little, but on big numbers. A specialty contractor, in my mind, making 20 points plus gross on projects. And so explain how it would work for, let's say, a drywall contractor or any specialty trade contractor to utilize Build.
So, I mean, as you're intimately aware, in the construction space, the relationship is everything, right? The relationship between the sub and the GC and the property owner, the sub and the supplier. And we come from a construction, background, construction and finance background. And the number one priority when we were looking to launch our product is how do we incorporate our product into the current way that the contractor purchases materials without disrupting that relationship. So, you can think about Build largely as a pass-through. So the specialty contractor would negotiate a purchase, let's call it a drywall contractor with their supplier, just as if Build wasn't involved. So they're negotiating the cost of the drywall, the amount, when they want the drywall to be delivered, and everything aside from payment. Since Build will be paying the material supplier upfront, it's essentially like a COD situation. So the contractor should be able to negotiate a cash discount with their supplier. And guess what? This helps tip the negotiating power back to the contractor. So now all of a sudden the contractor can go to a few different suppliers and they have a little bit more leverage than they would have in the past when they have to use terms or, potentially a credit card. So that's the first thing
Yep. And that's a great one because suppliers love to get their cash fast and they'll give you a better deal if you pay them quicker. So that's got to help offset your cost, which we'll get to in a minute, but please continue.
Exactly. So once the contractor has finalized the quote and the date they want the materials, all we need is a copy of their project contract and a copy of the finalized quote. They provide that to Build along with the date they want us to pay their supplier. We'll reach out to the supplier and ask for the supplier's payment information. We'll pay the supplier. A lot of times we're paying the supplier same day. So this isn't a situation with like a Wells Fargo or a Bank of America where it takes 30, 60 days to get approved. We're very quick, and we pay that supplier upfront prior to shipping the materials. Then, and we're not really a party to when the materials are delivered. We just want to ensure generally that the materials are going to be delivered within 10 days of us releasing the funds to the supplier. When we release the funds to the supplier, that starts the clock on the 120-day term. So the contractor, you can think about Build as a pay when paid or 120 days, the sooner of the two.
So what is your leverage point? In other words, how do you manage your risk? I know 120 days, if a contractor can't pay because he hasn't been paid, the job stops. I mean, I got all kinds of stories, but things happen. How do you manage that?
Yep. Yeah, that's a great question. And it's not too different in a way than how a subcontractor manages their risk. And they might not be thinking about it in that way, but we are entirely project based. So when a subcontractor comes to build and they say, hey, I have, a school project and I'm here in Austin, maybe it's right outside Austin, and I've been hired to, do all the electrical work. I have a $500,000 contract. We're going to take a look at that contract, and we can pull in a ton of data because it's public information on the job. We'll take a look at the GC, the property, all of these different factors, and then we'll determine a reasonable credit limit based on their contract value and the project. And I know this sounds like a lot of diligence that we need to perform, but again, we're doing this in less than an hour, and a lot of this is automated. So we're largely looking at the project and we're looking at the contractor. But to one of your points earlier, a lot of these contractors are growing, and they're growing very rapidly. So we will look historically, we look at the sub and the owner, and we do a soft credit check there, and we want to make sure, they pay their bills, right? I mean, that's important, but we're not going to be like a typical bank that's requiring a 700 FICO. We are going to put a lot of value on their history. If it's a newer business, okay. Well, were you a GM of another business? Can you kind of explain what is your story here? We're only focused on construction, so we get it, and that means a lot to us when we're evaluating a contractor. So we look at both the business, the individual, but then we put a lot of weight on the actual project.
So your collateral is the material. What is your collateral? Because you're looking, you say a soft credit check. I love that. A soft credit check, and to look at history. So you feel comfortable with the sub. You say, let's go for this. You loan the guy 100 grand, and it's, 90 days approaches, 100 days, 110 days. You start getting a little antsy, and I'm looking at the wrong side of this, I understand, but I'm trying to figure out how you manage your risk. So what happens when 120 days hits and you don't get paid?
Yep. Great question. I didn't finish my thought here. So we operate very similarly to a building material supplier. And what I mean by that is a supplier has mechanic lien rights in the event that they're not paid back by their customer. Build has those same rights since we are technically purchasing the materials on the contractor's behalf and reselling those materials to the contractor. They're just agreeing to pay Build back over a 120-day period. So we still have those mechanic lien rights. And if we haven't been paid back by a contractor, they likely haven't been paid, right? So we're sending the same preliminary notices, whatever the documentation is required per that state. And we're standing alongside the contractor, the sub, in the event that, they're having challenges with their GC. We're additional firepower to go and say, hey, listen, the work's been performed. We supplied the materials. We need to receive payment, pay us and pay our customer.
So in essence, you're part of the supply chain. You're just between the supplier and the buyer, right? That's all. You're another entity in that chain: manufacturer, supplier, build, the buyer, right? And that's how that. So you have the same as the contractor. Interesting. Let's talk about the cost. Can you talk about the cost?
Yeah.
How do you structure that?
Yeah. So the cost is going to depend on the strength of the contractor and, their repayment history over time. So generally, I mentioned earlier, a bank line of credit is going to be the most inexpensive option. Call it, 7 to 10%, 7 to 12%. If we're talking about more of an online lender, that will be significantly higher. But Build is going to be closer to the cost of like a commercial credit card. So, in the low to mid 20s, somewhere around there. But when you think about the cost of Build, really the right way to frame it, and for a contractor to think about Build, is what's the cost relative to their project, right? So if I have let's just call it a $100,000 project, and my material needs are about $30,000, and I plan on using Build for, I don't know, maybe I need 90 days. What we walk through with the contractor is what is the cost for that 90-day financing and what is the impact to their profit, so that on their future project, they slightly bump up the bid. It works out to be about 1 to 1.5% is the cost of Build relative to the contractor's project value.
That's interesting. That assumes it's 70-30 labor and material, because as the material goes up, obviously the cost proportionally goes up too, right? So I'm dealing with a company
Exactly.
that we, and it was a drywall company that's gotten into the rain screen business, and it's been a great move because drywall is historically labor intense, and rain screen or even curtain wall is historically material intense. But so you have to look at that. But I love what you just said. You make a business decision, right? Whether you're going to make 22% or 19%, is it going to make your life easier? Are you going to be able to focus on actually doing a business instead of running around trying to scrape money together? And I think, as you said, on a job per job basis, it's simply another cost of doing business, right?
Well, it's another cost, but more importantly, what it will help unlock is your purchasing power. So by working with someone like Build, you should be able to take on anywhere between 1.5 to 2x the amount of projects than if you were just buying on supplier terms or using cash. Because if you're buying on supplier terms, let's just say you're able to receive 30-day terms with your supplier, on average, it takes contractors 80-ish days to get paid back. So you're going to have a gap there of about 50 days in your cash flow. With Build, you have that 120-day runway. So again, you can line up the project with the specific financing and truly line the two up. But now you can take on twice the number of projects. So yes, there will be a cost associated with that, but you're going to make it up in the profit margin because you'll have the ability to take on a larger number of projects. So any contractor who's looking to grow, financing is a great option. If you're a contractor and you're happy with the amount of business that, the amount of revenue and that's where you're comfortable because you've reached your goals, financing might not be the best fit for you, or maybe not, our type of financing.
I think when you want to grow your business, and you just said it, and you could do, 10 different pro formas, but if you're a $2 million company and you can go to 3, and the only thing it's going to cost you is a few more points on, net on that additional million, and you're going to make an extra 20. I mean, that's a pretty good bet, right?
Right.
Hey, everybody, if you're looking for a strategic business partner who does subcontracting work on the interiors, let me tell you about the CFP Group. They are a minority business enterprise and have been in business for over 20 years. If you're interested, you can contact them by email at cfpgroup1@gmail.com or call them directly at 410-977-8568. That's 410-977-8568. Take it from me. I've done business with them, and I know they can get the job done. I think, the more I understand it now, the more I see, I'm a strategic kind of contractor thinker, and I would say, well, where can I utilize that? So tell us a little bit about, not names, but what kind of industries you're in particular: drywall, curtain wall, electrical. You mentioned a couple of times. Tell us what contractors are migrating toward Build.
I mean, really, the whole gamut. We do a lot in the the big trades. So flooring, electrical, concrete, plumbing, HVAC. We do a lot in solar just because of our experience in solar prior to starting Build. We funded all of the solar that just went on the Naval Academy, and that's just a coincidence. I am from Annapolis, but that I didn't even know about this until after we had already funded it. It's like, oh man, I need to get out there and check this out. That was just awesome to see that kind of come full circle. Another big project, we recently funded all of the flooring for the Houston International airport. And, beyond that,
What did
I'm
you
sorry.
buy? What kind of materials did you buy? If you can say flooring, was it
Oh
terrazzo?
man, I don't know.
Okay,
I should know.
that's all right.
I should know.
You've got your hands all around the industry, which is great. You really, this is your first real year of business, I would say. Is that a correct assumption?
No, this would be this is our third year. So 2019 was our first full year. 2020, second full year. 2021 is really our third year operating.
So your ability,
and we're in roughly 48 or 49 different states. We have projects in 48 or 49 states across the country.
That's awesome. So you got a big reach. Now your ability to grow is based on your visibility. The need is there. Your visibility, your ability to get the word out so people understand what you do, because I didn't until this interview. Number 3 is your ability to borrow. I assume you got to go somewhere to borrow against what people are borrowing, right? How does that work?
Yeah, money doesn't grow on trees, right? So we're funded by a private equity firm, a firm called LL Funds out of Philadelphia. They provide us both our operating capital, and we have a warehouse facility. A warehouse facility, I mean, it sounds like it's a physical location. You can think of it as a very large line of credit. So every time we're going to extend funding to a contractor, we're drawing down from this large line of credit and then lending the money out to purchase the materials. So, at a certain point, as we continue to grow, we'll likely have more of the Wall Street type of commercial banks who we're working with on this front as well. But you nailed it. I mean, material financing didn't exist until Build was on in the picture here. So we have to spend a lot of time educating the market, explaining what it is, making sure people understand that this is an option. And it sounds a little too good to be true. So there's this trust factor, making sure that building material suppliers, general contractors, other parties in the construction ecosystem really understand what this is and how it will also help them, right? If suppliers are getting paid up front, they're happy. If general contractors have subs who are getting materials on time and are hitting their schedule, they're happy. So this really is a win-win, but it's going to take a little bit of time before the industry truly understands, hey, this is a great option for everyone. And that's where we're spending a lot of our time, quite frankly. And this is why I'm excited to be on the podcast. So, folks can just learn about it, that this is out there, and then obviously do your own homework and figure out if it's right for you.
So Jesse, I got to tell you, you should have been around 20 years ago, but you weren't. There is not a single contractor. And if you look at the podcast, you're going to see interviews with a stone contractor, curtain wall contractor, drywall. These are big companies, right? And we all have the same issues. How do you fund a growing business? So this has been an eye opener for me as a contractor. I think it'll be tremendously useful to our audience and quite frankly for the people I come in contact with every day, and even the current companies I'm consulting with. Now, before I let you go, I want to pick your brain. Overseas, Rain Screen, these companies, they want to print money, I guess, but Rain Screen, which is an open joint system, which kind of clads building these days, it's super popular. But to get product from overseas is a problem to begin with. But when they send you terms and they say, we want 250 down just to start procure material, and we want 40% before you get any product, right? Do you get involved in that business? And if so, how? And if not, why not?
Yeah. And this is a bit challenging, not necessarily because of the international aspect, but it has to do with the lien rights and making sure, one, we're not jeopardizing our lien rights, and our customer will start to incur interest, as soon as we release funds to the manufacturer. So those are some of the variables that we have to balance when we decide whether we're able to fund a purchase request. Earlier, I mentioned generally we want the materials delivered to the job site within 10 days of when we disperse funds to the supplier. We're willing to go out roughly 30 days. That doesn't really solve the pain point around the international.
No.
But what we can do, and again, I in the example you just laid out, I don't think this gets us there necessarily either. But what we can do is if the contractor has the ability to fund the initial deposit, the 20, 30, 40%, whatever that deposit is, we can, when the manufacturer is ready to ship the materials, we can fund 100% at that time, and the manufacturer can disperse the deposit back to the sub. So, we might not be able to get all the way there, but we can help part of the cash flow challenge that the contractor runs into.
So you're talking about, let's say 20 points that's an annual rate of 20. So it's what, maybe 1.8% a month, something like that. So
it's about 2% a month.
Yeah, 2% a month, something like that. Yeah. So it's just a simple math deal, right? To know what it's going to cost you. And if it's 90 days, it's going to be 2% a month for 3 months based on however much you buy or you borrow. That's awesome. I love it. I love the idea. Now, how soon is it going to be? A rhetorical question. How soon is it going to be before other people are doing what you're doing? Is anybody else doing this? And not that I want their name, but
no, I mean, so I am looking forward to other competitors jumping into the space because that's less money. One, it validates what we're doing, and it helps in terms of educating the market. So, we have to spend less time and money and resources trying to just educate, contractors that this is a viable option to grow their business. And it validates to investors, to the larger industry, that this is here to stay. So I'm very proud of the fact that we're the first movers here, but competition will be a good thing. I unequivocally believe that, and that's what I tell all of my teammates, on a weekly basis.
I love that, and I wholeheartedly agree, and I preach that. Some people want to hold on, though it's our secret. Well, it's not your secret. It's going to get out anyway. You want good competition. It's good and healthy for the industry.
Exactly.
Without a doubt. So, Jesse, tell our audience where they can get a hold of you or how they can find you the best way. LinkedIn
is probably the best approach there for me personally. But, our website, BILLD.com. Go check us out, shoot us a note there. We have chat built into the website, whether it's, I like to jump on there from time to time, but we have a whole team of colleagues who are talking to contractors and suppliers and GCs on there as well. But always feel free to shoot me a note on LinkedIn. I love to have these type of conversations and just to meet folks over there. And that would probably be the best approach.
Awesome. And you'll be able to find Jesse on our website, adacorp.com, and we'll get into that a little bit more. And by the way, if you go find Jesse, tell him Dave sent you and he'll give you a good discount, right?
I love it.
Anyway, listen, it was a pleasure. I want to thank you so much for joining us. And I got to tell you, I wasn't quite sure how this was going to go, but I couldn't be happier. You were right on point. And I think the listeners, whatever stage of business they're in, are going to understand a little more about financing and understand how you can help them on a job-specific basis. So again, Jesse, thank you so much.
Yep. Thank you. Thank you for having me.
And for all you listeners, thanks for joining us today. Stay safe and stay tuned to see how you can get a hold of us. So follow me on Instagram and Twitter at Elevate Industry. Check out my YouTube channel at Commercial Construction, Elevate the Industry. Visit my website, adicorp.com, adicorp.com. Go to LinkedIn, search for David Procida, hit connect, and follow me. Please rate, review, and comment on this episode, and I look forward to seeing you next week. All the music for the episodes, including our theme song Elevate, was provided by DMV producer Trey Skills. If you like what you heard, follow Trey Skills on Instagram at Trey Skills, TreySkillz. That's TreySkillz. Elevate. 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 Elevate.